Hello, everyone. Thank you very much for inviting me. My name is Na카조라 from Tokyo. This is my third or fourth time coming to Korea. However, the last time was maybe 10 years ago, so I am very glad to be here. Regarding Korea, my mother especially loves to watch Korean movies and dramas, to tell the truth. So thanks to her, I often watch Korean drama like Crash Landing on You, Itaewon Class, Startup, and so on. So I can't speak Korean at all, but sometimes I think I can speak Korean, like not only 안녕하세요, 감사합니다, but also 맛있어요, 괜찮아요, and so on. But I would like to say just thank you very much, and I am very glad to be here. And anyway, let's move on to today's topics. Today's topics is the current situation and the future of Japan. Can we make a complete break from the last 30 years? Who knows? Of course, I don't know. However, I would like to try to explain what is the situation in Japan right now. Because I am the member of the Council on Economic and Fiscal Policy, and this is under the Prime Minister directly, and Kishida-san, my Prime Minister, appointed me. So that's why this committee is quite high levels, and we has a responsibility to formulate the basic policies for June. So I would like to talk about the current and the future situation in Japan from this perspective. Let's look at the Japanese economic situation first. So these days, we are in the excellent conditions. The left-hand side chart is the real GDP and potential GDP. It means the GDP gap. Although the output gap is not perfect, I think it can at least be said that it has changed from negative to positive. And right-hand side chart is the wage increase ratio. Kishida cabinet first priority is to achieve very positive cycle of growth and distribution. But if you look at the actual result of the Spring Labor Union, it will be 3.58% in 2023 and 5.24% in 2024. Of course, this doesn't include small and medium-sized enterprises that don't have unions. So it seems that there are actually voices of dissatisfaction from such organizations. But on the other hand, in response to this trend, salaries, especially among young generations, have increased dramatically. It is true that price indexes are rising, and I think it is good to see that there may be a major change in the trend. This next page is the stock market. Both are the stock price trend. If you look at the short period since 2020, the left-hand side chart, you can see that stock prices have been rising in one direction. As shown in the chart on the right, from a long-term perspective, it can be said that we have just returned to the bubble period of the 1980s. But in any case, I think it is certain that capital is flowing strongly into the stock market. As a background to this, equity strategists explain that the corporate governance code was effective, or that PBR 1.0 times reform by the TSE was effective. But do you think so? I don't agree with that because, corporate governance code was formulated in 2015 and revised in 2018 and 2021. Why now? Why now the reason of the support our stock market? And in terms of TSE reform, the request is due in March 2023. In my view, I think Why the current stock market is quite strong? Because supported by weak yen and demand and supply. Please take a look at this chart. Those are the left-hand side is the U.S. and right-hand side is the Japan. This is this chart is a small is calculated a small cap divided by large cap. So this figure is slowing down, downtrend, because there is a possibility one is small cap is down, or large cap is up, or they're both happening at the same time. I think, in my view, only the large cap are driving the stock market. As I mentioned earlier, I believe that the weaker yen plays a major role in raising stock prices. The left-hand side chart shows the exchange rate, and the yen is depreciating rapidly. But also, look at the right-hand side chart. This is the Japanese corporate profit. Of course, the weaker currency is not only good for the nation, but it also has positive aspects, such as strong corporate performance due to the weaker yen and higher stock prices. I said the weak yen is supported to the Japanese strong performance of stock price, but another reason, second reason, is demand and supply. This chart is the new NISA system. New NISA system has been enhanced since January 2024, so I think it has become easier to use. In fact, you can see that the number of accounts and the balance of securities purchased by them are increasing. Even in Japan, investors often ask how high Japanese stock prices will rise. I've been a credit analyst, so I don't have a very optimistic view, but I still think it will rise to around 45,000 yen. In other words, stock prices will continue to rise as long as funds contribute or continue to flow from overseas to support the supply and demand balance, as well as new funds from domestic investors. In other words, if this kind of money flow stops, the stock's price will hit the top. I introduced a very good aspects right now in Japan. However, we had been stagnant for 3 years from the first place. And I would like to say we have still structural problems. I will introduce two today. One is the underinvestment, and another is the population problems. First, there is underinvestment. This figure shows changes in the value obtained by subtracting investment from savings in the corporate sector. In other words, if it's above zero, the country is over savings situations. If it's below zero, it's opposite. So it can be seen that South Korea has been investing properly. But on the contrary, Japan has so many savings. So it means it is said that Japan company lost their animal spirits after the bubble burst in the 1990s. But because the Japanese company were not able to actually invest, and we have no concrete source of income. So what Japanese companies did during this period of uninvestment was direct investment abroad. This chart shows that we have been investing overseas. On the other hand, there was almost no investment inward direct investment. In such a situation, there will be no source of income. Even from the perspective of foreign companies, investing in Japan was not attractive at all. We have a goal of investing inward direct investment from 46 trillion yen in 2022 to 100 trillion yen in 2030. And we would like to see concentrated investment in areas such as semiconductors and biotechnology. Whether it will depend on how the Japanese government handles it. The second, even larger structural problem is the population problem. This is also a problem in here, Korean. Japan's birth rate is now 1.26. This is my own opinion, but there are various reasons why the birth rate is low. So I don't think a simple policy of investing the number of children by providing subsidies will be effective. This is why Japan's population policy is not very effective. For example, I think more measures should be taken to provide support for housing costs, which are a huge burden for families raising children, or to make painless childbirth covered by insurance, and so on. Furthermore, the population problem is not only due to decline in the birth rate, but also because the working age population is decreasing. So how to maintain an aging society becomes a serious problem. Social security reform is a major theme at the Economic and Fiscal Policy Committee. We are currently discussing how to reconsider social security for all generations. There are many other structural problems, to tell the truth, such as the Japanese people, the income being too low, or the labor market being rigid, and gender equality is still not perfect, and so on. However, today I pick up only two, so the underinvestment and the population problem. But I think it's fair to say that this alone has been significant enough to have shaped the last 30 years. However, I think it can be said that Japan is at least at a crossroad where change is possible. From now on, I would like to tell a good story of Japan, and will make people have higher expectation for Japan. I'm sure you know that the Bank of Japan changed its monetary policy in March. It can be said that wages has risen to the extent that monetary policy can be changed, and prices indexes have risen to the point where they are aiming for 2%. We are now in a state of ending deflation and ending Abenomics. The question now is whether we will return to the previous state, or whether we can achieve or we can enter a new era of 1% real GDP growth. This means that measures are needed to achieve a real GDP growth rate of 1%. How can we do? And what can ensure Japan's growth? I think this is GX, green transformation. In May 2022, Prime Minister Kishida declared in London that Japan would issue 20 trillion yen in GX, economic transition bonds, over the next 10 years. And that, including this, 150 trillion yen, 1050 trillion yen, would be invested through public-private partnership. Although it has taken a year and a half since the declaration, GX economic transition bonds were issued in February of this year, and GX investment momentum is finally increasing. The important thing is what to invest in, and it is important to invest in Japan's winning strategies. Look at this chart, left-hand side chart. Specifically, Japan may not have many world-class manufacturing of products right now, but if you look at this patents related to GX, Japan ranks first, and Korea is second. So I hope that both of us can demonstrate our strengths in this field as Asian teams together. On the other hand, when economic growth occurs, fiscal slack tends to occur. The next point of view is how to balance this with fiscal reconstruction. Japan still has the goal of achieving a surplus in the primary balance by 2025. Although I think this will probably not be achieved, I believe it is important to aim for fiscal reconstruction so that we can achieve a surplus in 2027. The chart on the left shows changes in the primary balance to GDP ratio, but if growth is not possible, it will gradually deteriorate. If economic growth can be achieved, fiscal reconstruction will also be possible. I have talked about lots of things, but I would like to conclude by summarizing the main points of today's talks. Today, Japan is at a crossroads, wondering whether it will really achieve an economic growth rate of 1% in real GDP. There are many problems, and these are difficult to be solved, such as social security issues and population issues. But it is certain that we are changing now, like price index are rising, wages are rising, and the stock prices are rising, and especially the mood is getting better and better, especially among young generations. In this situation, if it becomes possible to match a real GDP growth rate of 1%, and if investment can be invested to achieve this, I believe we can recover in the visible year. We are exactly at the crossroads, as I said repeatedly, but I am the member of the committee, the Council on Economic Fiscal Policy. I would like to my best to improve the Japanese economy, And that's all for me. Today, I hope some of you, or all of you, if any, have more expectation to Japan. Thank you for listening. Thank you very much. That's it.